All right, let's talk about RZLV. This stock is in the middle of a serious battle right now. It's getting hammered by short sellers. And today, we're going to break down exactly what's going on, why you should care, and what could be coming down the pike.
Okay, so here's how we're going to tackle this. We'll start with the pressure on the stock right now. Then we'll get into this big issue of dilution. It's a real problem. After that, we'll zoom out and see what the broader market is doing. But it's not all bad news, so we'll look at the bull case, then lay out a game plan, and wrap it all up with the one big question everyone's asking.
So the whole story today really kicks off with this number right here, down 7%. That's a big move. RZLV is really feeling the heat, and it looks like a fresh wave of short sellers are piling on, betting this stock is headed lower.
And you hear quotes like this one floating around. Pandora's box has opened to the downside. It sounds dramatic, I know. But what it really means from a technical standpoint is that some key support levels, think of them like safety nets for the price, have just snapped. And now the big question is, how low can it go?
Okay, Section 1, a stock under pressure. So where is all this pressure coming from? Well, you've got the charts looking ugly and short interest on the rise. It's a tough situation.
But you know, it's not all about external forces. The real thorn in the side for a lot of long-term investors, it's something the company is doing to itself. People are calling it the company's biggest self-inflicted wound. And that brings us to the dilution dilemma.
So before we go any further, let's just make sure we're on the same page with this term, stock dilution. Real simple, it's when a company just issues more shares. Think of it like a pizza. If you have a pizza cut into 8 slices and you own one slice, you own 1/8 of the pizza. But if the company decides to cut that same pizza into 16 slices, well, you still have one slice, but now it's a much smaller piece of the whole pie. That's dilution. It can really put a lid on the stock price, even if the company itself is growing.
And check this out, because this is where it gets kind of wild. The company's overall value, the market cap, it's actually been growing over the last few months. The pizza is getting bigger, but the stock price, what you and I would pay for a share, has gone nowhere. It's just flat. So what gives? How can the company be worth more, but the stock isn't moving? Yep, it's that delusion we were just talking about. It's the main reason for this frustrating disconnect. All right, so we've got company-specific issues. But here's the thing, you can't just look at RZLV in a bubble. We have to zoom out and look at the market headwinds, because this isn't just about RZLV.
Today is what you'd call a classic risk-off day. And that means investors are getting spooked. They're selling things they see as risky, like a lot of AI stocks and small caps, and moving their money into safer stuff. And you can see it across the board. It's not just RZLV getting hit. Look at Poet, SoundHound, even a giant like Intel is down big. It's a sea of red for growth stocks.
And it's no wonder people are nervous. Just look at this list of what's on the horizon. I mean, you've got a potential government shutdown looming. You've got massive earnings from the big tech companies this week. That could move the whole market. The Federal Reserve is meeting on Wednesday. Who knows what they'll say about interest rates? There's a Supreme Court ruling that's been delayed, and even weirdness happening with Japanese bond yields. It's like a wall of worry, and it's making everyone hesitant to take on risk.
So, okay, we've talked about dilution, we've talked about a nervous market. It sounds pretty bad, right? So you have to be asking, why would anyone be bullish on this stock? Well, let's flip the coin and look at the bull case for RZLV, because there's definitely another side to this story. Remember that short interest we talked about? Well, here's the twist. Look at this. It's jumped from under 20% to over 24%. Now that's a lot of people betting against the stock. But that can also be rocket fuel. If some good news hits, all those short sellers have to rush to buy back their shares to avoid huge losses. And that buying frenzy, that's what we call a short squeeze, and it can send a stock flying. The other big part of the bull case is just valuation. Fundamentally, the argument is that the stock is just plain cheap. I mean, the company is aiming for over $300 million in revenue this year. That's a huge number. But when you look at the stock price and compare it to its peers, it just doesn't seem to be getting credit for that kind of performance. Bulls see a classic diamond-in-the-rough situation here. And it seems like the company's leadership is dropping hints, too. When the CEO, Dan Wagner, was asked about this disconnect, the business is doing well, but the stock is in the gutter, his answer was this little 2-word phrase, for now. It's one of those things that makes you go, what do they know that we don't? It definitely suggests they think something is coming that could turn things around. Okay, so we have the bull case and the bear case. It's a real tug of war. So what does that mean for an investor? How should you think about this?
Well, let's talk about a potential game plan and the key price levels that everyone has their eyes on right now.
So if you look at the chart, the bears have definitely scored some points. The stock broke below its 50-day moving average. That's a key short-term trend indicator. Then it smashed right through an important upward trend line that had been holding for a while. So with those two support levels gone, the next big question is, where's the floor? All eyes are now looking down to the next potential support level.
And that first level that's on everybody's radar is $2.50. This is seen as a potential good buy zone, the first spot where you might see buyers start to step in with some real conviction. Now, if it breaks through $2.50, the next major line in the sand is the $2 mark. This is what some are calling a really good buy level, a psychologically important number for sure.
And then there's the ultimate scenario for the bulls. If this thing somehow drops below $2, well, you're going to hear people start calling it a gift. Why a gift? Because at that point, the negative sentiment would be so extreme, it often means the worst is priced in and the risk-reward has shifted dramatically in favor of the buyers.
So, we've looked at everything. The technicals, the dilution, the nervous market, and the bull case. It all boils down to one single long-term question. This is the whole shebang right here.
And here it is. Will this company's clear potential, this feeling that it's fundamentally undervalued, be powerful enough to fight off these two huge enemies? The constant dilution from within and a super nervous market from without? That's the battle. Potential versus pressure. And that's the story we'll all be watching unfold.